Hey everyone, welcome. So today we're breaking down one of the most common financial questions that I get. What's the difference between term life and permanent life insurance? In this case, we'll go over whole life insurance specifically. So I'm going to keep it simple, clear, and focused on just helping you make the right choice for your family and financial goals. And if you don't know me, my name is Tobin Short. I'm a financial services professional here to educate and help you level up your money game and make good, sound financial decisions. All right. And next slide. All right, so before we dive in, quick disclaimer, right? This is for educational purposes only and should not be considered specific financial advice. For recommendations tailored to your situation, always consult a licensed financial professional advisor. So let's start with the big picture. There are two main types of life insurance, okay? Term life and whole life. So term is temporary, like renting coverage for a set number of years. Whole life is permanent, like owning a policy that lasts your entire life and builds cash value. So let's go ahead and unpack both there. So term life. Term life is real simple. It covers you for a set number of years, maybe 10, 20, 30 years. It's pure protection, meaning you're paying only for the death benefit. No extras, and that's why the premiums are a lot lower, okay? So think about the way you shop for all of your other insurances, like home, auto, health, and dental, okay? One thing to keep in mind, term life coverage does expire. Again, typically 10, 20, or 30 years. All right. So once the term is over, your policy, it's done, it ends. Unless you renew, which usually comes at much higher premiums. Okay. A lot of times you don't want to renew unless you've got all that money, right? Because you're going to be a lot older and who knows, how your health is as well when it comes to it. So that's why it's really important to time your term policy around your biggest responsibilities, like raising kids or paying off a mortgage, and also planning for future needs. All right, whole life. Whole life is a little more complex. It's permanent. Okay? It's a permanent type of permanent life insurance. So it doesn't expire as long as you keep paying the premiums. All right, it also builds cash value, which you can access while you're alive. But with that comes higher premiums. So you're paying for both protection and savings in one. Okay, think of it like buying a home now, not just renting. You also need to consider the structure of the policy when it comes to optimization between the cash value, the dividends you're getting paid, right, and how you're going to use those, and the benefits as well. So just a little quick illustration on kind of like how the cost looks difference there. For the same amount of coverage, right? Your whole life is gonna significantly be more expensive than term. That's because you're also funding you're funding a lifelong coverage and building cash value, kind of like bundling insurance with an investment. Okay, but life insurance is not an investment. Okay, it's life insurance, right? There is just kind of a sort of a savings portion to it. Again, that's what we call the cash value. Okay, life insurance in and of itself is not an investment product. Okay, so you can see this example here. We got a 30-year-old male, good health. For a term policy, it might be about $25 a month, but for a whole life policy, it might end up being $300 a month. But again, part of that premium, all right, that $300 a month is going towards insurance costs and expenses. Okay, and then another part is going towards that cash value savings. Another example, a 40-year-old female, good health. Okay, a bit more expensive simply because she's older, right? And then again, same thing with that whole life policy. Okay, more expensive. In general, if they were the same age and excellent health, the female's policy would actually be lower. Right? The premium for the policy would actually be lower, right? Because women tend to live longer and be healthier. Okay. So there's a popular strategy called buy term and invest the difference. The idea is that you buy low cost term life and then separately invest what you would have spent on whole life premiums. Over time, those investments might actually outperform the cash value that you would have had in a whole life policy if it's actually managed wisely. So the big problem with this concept is that most people actually still don't invest the difference. Okay. Maybe they don't know how, or they just can't financially. All right. But that is a popular strategy out there. So how does cash value actually work? When you pay your whole life premium, again, I mentioned this earlier, part of it goes to the cost of insurance and part of it goes into a savings account inside the policy. You're just going to keep it real simple right there. Okay. You got the part that goes towards the premium, cost of insurance, and the part that kind of goes to a savings account inside the policy. That cash value grows over time, often earning interest or dividends, depending on the carrier's earnings and holdings. So typically averaging around 6 to 7% annually. Okay. Oh, and it does grow tax deferred. All right. And then you can't access it during your lifetime. Right. So ways to use cash value. You can use cash value in several powerful ways. So one, you can borrow against it, make withdrawals. You can pay your premiums of your policy, or even surrender the policy, right, for cash. That basically means like take a full-on withdrawal, and then you're not going to have the life insurance anymore. Okay. Some people use it to supplement retirement income or as a tax efficient reserve. Right? But what really makes it interesting is how it's been used by some very, very successful people. Okay, for example, Walt Disney used cash value in his life insurance policy to fund the early development of Disneyland when banks wouldn't lend him the money. Without that policy, Disneyland may never have actually, it may never have existed, right? Ray Kroc, the man behind McDonald's. He used life insurance cash value to meet payroll and keep the business running during its expansion. And then J.C. Penney, founder of the department store chain, he tapped into his policy's cash value during the Great Depression to keep his business afloat. I love these stories because it's a it's just amazing because not a lot of people really know about this, right? And but now you know. Okay, so yeah, right. These aren't just stories though. They're proof that life insurance can be more than protection. Okay, it can be a source of liquidity and leverage when you need it most. So you just gotta keep in mind accessing cash value through loans or withdrawals can actually reduce the death benefit and it may have tax consequences if it's not managed correctly. That's why it's important to work with someone who actually understands how to structure it right and advise you the right way on how to use it. All right, so pros and cons. So starting with term life. Super affordable, it's easy to understand. It gives you the most coverage for your dollar, right? Especially when your needs are the highest, like early in life while raising kids. Okay. And when you've got, a lot of assets to protect as well. All right. Cons. All right. Term isn't perfect. When it expires, there's usually no return of premiums. Okay. And you don't build any cash value. If you still need coverage later in life, you'll likely pay a lot more or may not even qualify. All right. Just to go back to that, no return of premiums. Okay. It's kind of one of those, you use it or lose it. But that's what insurance is. All right, nobody expects to have to go to the hospital for a medical emergency, but health insurance can help cover those costs. Same with dental insurance, and then again, of course, auto insurance if you were to get into an accident. The thing is, we all know we're going to pass away. We just don't know when, right? Term insurance helps kind of give you that coverage and that peace of mind for a very low cost. All right. Now for whole life advantages, all right, you get a guaranteed lifetime coverage, get fixed premiums, and cash value you can tap into. It's a great fit for estate planning or if you want permanent insurance with added benefits. So again, whole life does have its own cons and drawbacks as well. It is significantly more expensive and has lower returns than most investments. Okay. It's not easy to get out of early without penalties. It's also a bit more complex, right, which can make it harder to evaluate. Okay. And again, when it comes to a permanent policy, like in this case, whole life, you need to be working with an advisor that actually understands it and knows how to properly explain it to you and structure it correctly. So, who should choose term? Okay, term life might be your best bet if you're on a budget, if you need a lot of coverage or just want simple protection for a certain period of time. Okay, it's great for young families, new homeowners, or anyone prioritizing affordability and flexibility. I always advise clients if we're having trouble kind of figuring out what we need, the immediate need, is something that should get covered, and it's most easily done with a term policy. Nice and simple, quick, and very affordable. Whole life may be a better fit if you're looking for permanent coverage, if you want to build cash value, or you need advanced planning, like for legacy, business, or estate needs. It's more strategic, but you do have to be comfortable with the cost and the commitment. So, two quick real world examples. We have a 35-year-old parent gets a 20-year term policy to protect their family during their highest risk years. Okay. And then we've got a business owner who might get a whole life policy for key person insurance and use it in their succession plan later. All right. Got different goals and different tools. So most financial advisors recommend term life for the majority of people, right? Again, nice and simple, especially when the budget matters. Whole life does have its place, but usually in more tailored strategies. Always consider your specific needs, your timeline, and the goals before you choose. Okay, again, the best thing to do is to speak with a licensed financial professional to help assess and analyze your situation and your needs. Maybe your situation and desires actually calls for having both term and permanent, right? Or maybe one now, and then we add the other one later. Okay. So bottom line, there is no one size fits all answer. Okay. Term is great for affordability, right? It's affordable temporary protection. Whole life offers permanent coverage and cash value, right? The right choice just depends on you. Okay. You, your stage in life, budget, and what you value most. And again, a financial professional is going to be there to help, should be there to help educate you, right? Answer all of your questions, okay? And make sure you're making the right choice for yourself. All right, so thanks for sticking with me. All right, if you guys have any questions or want help finding the right policy for your goals, just reach out anytime. My contact info is right here. You can find me on all different platforms of social media. All right, don't forget to subscribe for more simple financial education. Like the video, put a comment, ask a question, whatever your thoughts are. Okay. All right. Your future self is going to thank you, right, for watching my videos and getting educated. Okay. I'm here teaching you some of the things that I wish I knew a lot earlier in life. All right. And I'm teaching people who are, in different ends of the spectrum. All right. Both young and old. All right. Again, don't forget to subscribe, hit that like button, and drop a comment. I will see you on the next one, which the next video I'm going to be making is how much life insurance do you really need? All right. Peace.